Hey everybody, Bob Kudla with Trade Genius. I'm here to talk to you today about some Colossus stocks that I think should be in everybody's portfolio as we move forward here in 2022. And these stocks, I basically call them the All-American All-Stars because they primarily produce their minerals in the United States and United States slash Canada. And there's a reason why that as an American, at least, you should be owning the mineral companies, public mineral companies that produce in the United States or in North America. And the number one thing is political risk. Is that what we're starting to see around the world is that exports are starting to be banned, or export taxes are going to go higher, or they're going to try to nationalize the mines. And we don't have to look any further back than the last couple of weeks to see that's already in process. So, in the food front, we had Hungary, Romania, Argentina, and Russia all banned the export of grains out into the world markets. As you know, Russia has banned the exporting of fertilizers, which includes Belarus also as well, which is causing a great deal of consternation around countries trying to acquire fertilizers for growing grains in the coming growing season, including China, which is going to be an interesting podcast in and of itself. And so what it's doing to us, it's waking me up to the fact that, look, I don't want to own a mine and wake up one day like I had in the past with Rio Tinto and with Freeport McMoran, where in Indonesia they call a wildcat strike, a general strike, and they extort more concessions out of the miner after they approve the mine, after starting to produce, copper or gold in that situation. And that puts stress on your portfolio. The other thing they do a lot too in a lot of these countries, they have high taxes on dividends. So you just want to be very careful in where you're picking your locations. Now, my point of view is that I like the Five Eye countries, where they have generally you're protected. The rules are generally known, and there's a robust judiciary that just doesn't stamp whatever is being told to them by the politicians. And that is, you look at Australia, Canada, United States. Mexico is not a Five Eye country, but they've generally followed the rules, although every once in a while they do get a little sticky on some things, change the rules here and there. And then, actually they draw out production of minerals in Israel. There's a company called IPI, which is a fertilizer manufacturer. So I throw Israel in that area. And Argentina is a big producer of minerals as well as Chile, but sometimes you get some weird blowback there too. So I just said, you know what, I can make enough money just trading those stocks in those areas. And so, knowing that, right, Great Britain is not really extracting any minerals, so that's the fifth of the Five Eyes, and same with New Zealand. So as I look at the different stocks that I'm owning and want to own, they kind of fall into the general rule of we have the Green New Deal going right now, right? I think that's full court press, especially with energy prices higher. The politicians are sensing an opportunity to continue to go down that direction. As you know from my prior podcast, is I'm not against green energy. I'm against government shoving things down our throat. I think it should take its natural course. But, from a national security standpoint, I think it's good to have diversified resources, and, wind and solar are diversified resources, and they're just not what they're being advertised. A topic for another day. But, if we can get more of a balance between electric and gas in terms of transportation, that takes pressure off the marginal producers and also takes those guys out of the high profit game where they can cause mischief. So that's where my focus is. And so I want to go through some of the stocks that I own now that I think people should own. And they're all still good buys right now. And so the first one I want to bring up is silver miner, even though it's not in a green energy thing, but I think you need to own silver. I think it's on the cusp, and the best silver miner to own is Hecla Mining. And right now, on the way in which we trade, which I'll do a podcast on how we look at the markets, is that we have a basically a breakout that really started, I would say, beginning of February when the price was down around 480. It pushed all the way up to near 765. We're having a shallow pullback. We're staying above two bull bear lines that we like to look at. Well, we like to look at the 144 simple moving average, and we like to also look at the what's called the moving VWAP, basically moving weighted average price. That's volume weighted average price. And a lot of time price will come down and tag that. That's where the institutions trade, and they'll bounce. We selected 21. That seems to give me the highest probability of success. And now we're looking for that trend to change out of this consolidation back to move higher. And and we're looking for an opportunity for Hecla to go back and test those highs that we had in 2021, which was around $9.45. So Hecla is the first one. The second one is something that people definitely need to get on their radar, and they should own it. We have a company called PolyMet Mining, and PolyMet Mining is just starting to produce a varied amount of minerals that are used in the automotive business, both the catalytic converters for the gas engines, and also the minerals required for battery technology around the EV. And these guys produce nickel, cobalt, iron, copper, palladium, and gold, and they produce it all in the Minnesota Mesabi range, which is in the Iron range. Excuse me, and so I really like the fact that this is a U.S. based company, and it's an area in which I think we can extract a lot of minerals, and so it's going to be really interesting how this company grows. This company also is, when we look at it, it has it's above its moving VWAP, it's above its 144. It's also been consolidating for a long time. It's starting to get some noise now around this mine coming online, and it pulled back to the moving VWAP. And so I own it. I bought it. It's a longer term play for me, but we're in at right about the price it is at the moment, $3.29, and I'm looking for it to go ahead and test that high that it made just a couple weeks ago at 478. And then from there, I think it just can keep grinding higher depending on what they draw out of the earth. And they already have all the infrastructure in place. So, these were old working iron ore mines in that area. So there's rail there. There's ways to transship the ore to get it refined and get it to the market. So PLM should be on your list. The next stock that you want to own is that you want to own Quad U. That's UUUU. And Quad U is a uranium company that's based in the United States. It's going to become a protected company. We're not going to be exporting our uranium. We're going to be producing it internally. Looks like we're trying to restrict imports of Russian uranium. And Quad U has blue skies ahead of it. So we've been a buyer of this stock since $253. It pushed up to 11 back in the early part of basically November 21. I'm thinking now it's going to go up. It's going to test that as a double top, 1129. But beyond that, if you're looking at the chart on UUUU, this thing is it's traded in the up to $80 non-diluted. So I think this has an opportunity to at least double from the old highs, and that's my target at the moment. But I'm not selling myself short. When you look at uranium, when you historically, when we had a run from basically 2002 to 2006, 2007, and uranium went up 800%. This move started, it bottomed out in 2017, but it really didn't start taking off until 2019. But price went from $25 to $57 for the last time. The price went from like $12 to $150. So I think there's a tremendous opportunity for at least a double in uranium prices, if not a triple. The world is short uranium. There's not enough mining capacity. And you have guys like Eric Sprott hoarding it. So I think you're going to see tremendous movement in uranium. Plus, Quad U is also a rare earth producer too. So keep an eye on that. And I think this one's going to be one that you just throw in there, sit back, and enjoy the ride. The next one I'll talk to you about is in the same boat. It's CCJ. And I talk about it because I own this, but it's it's in Canada, Cigar Lake. It just double topped, and it's coming back right up to it again. There's no such thing as a triple top, so my expectation is we should see a move through there, and at least in their $10 move higher from the current price of $27.39, get over 28. I think we're looking at $38, and my view on CCJ as I'm looking at the chart here is that this thing could push up the resistance here I just referred to, 37.53, that ties in with a measured move of the breakout. Also a top that was in 2011. And then prior to that, the top was at $45. I'm thinking Cameco is going to go into the 50s. So that's my largest personal position. And I'm going to keep riding it, adding as I can on dips, selling calls against it as it gets overvalued short term, and then just drive this thing just like we drove Mosaic from 18 to 63 last year into this year. I think the uraniums are ready to make the same move higher. And let's see here, one more I want to look at here. It's called the United States Antimony Corporation. This thing hasn't broke out yet, but one thing that we're looking at with these companies is just put this on your radar and your watch list. It's just doo-dotting around. But when it catches a bid, it's one of these like holy grail stocks. In 2011, it went from 44 cents to $5. And so another producer of strategic metals that are going to get a lot more attention in the United States. And I think you should pay attention and keep your eye on it. But it's not a buy at the moment, but it's something that you should take a look at, maybe potential for some accumulation. And the last stock I want to talk to you about is LAC, Lithium Americas Corporation. It's they produce in the United States. And you have right now, we have a beautiful weekly ABC pattern breaking out here. So it's the ABC pattern. I'm measuring it from July of 2020. It was at $14. And the apex of the A move is at 41.47. We have a pullback to 28.05. I probably could throw some fibs on there to see what kind of retracement that is, but it looks like maybe a 1/3 retracement of that move. And then coming out of that move, my measured move on LAC is $54.67, and I'm looking for that time period on that is by July. So a tremendous opportunity with that as well. So those are the stocks I'm looking at right now. For tomorrow, if you're interested in any divvy plays, and I got one more for you that I haven't done my full research on yet, called MP Materials. This is a rare earth mine it's out in Nevada. If you travel on Interstate 15, it's right before you take the last dip into those solar concentrating towers in that lake bed before you enter into Nevada. It's on your left. It's the largest rare earth mine in the United States. It's not U.S. owned, but it's U.S. manufactured, and they're going to be processing those minerals in Texas, from what I understand. And rare earths aren't rare; they're just expensive and they're dirty, and that's why we let the Chinese take the ball and run with it. But the Chinese tend to get grabby with their rare earths, and they may put export controls on again. I highly suspect we'll put export controls on these as well. We may share them with the Japanese, but probably other than that, we'll keep it in the United States. And so there's a tremendous opportunity with this one. This one's also looking like it's painting out a cup and handle pattern. I also own this one, and the cup and handle pattern is from 2380. The cup goes to 5150. So you're looking at a potential $28 move from 58, and so there is a chance for this thing to go to $86. But I haven't done my full workout on it yet. I'll talk to you more about this when I have a chance to look at it a little bit more in a little bit more depth. But I also like this one as well, and they're getting more aggressive in terms of increasing production. So those are the things I want to talk about today, and I hope you like this format for the podcast. I'm going to try to do it every day if I can. If I see stocks of interest, I'll do that. I want to be able to at least give you guys enough information for a 15 to 20, 25 minute podcast, but actionable stuff. And so I'll talk to you about some divvy plays next, and then whatever else is on my mind this week. Thanks for listening. You guys have a great day.